Hello and welcome to another video. What we're going to do is speak about in this video is the all-important Fibonacci retracement sequence. If you look at any charting package, any basic charting package, it should have Fibonacci retracements. And we use Fibonacci retracements as an important tool in technical analysis. Not per se that it will predict what the market is doing. It's just a characteristic of what the market tends to do, and it gives us a framework to view the markets. Okay, so previously we spoke about the fact that the market moves. You remember we said the market moves from A to B. We call this the main pulse. And the move from B to C is a retracement. Then the market will move back up C to D. And this is an uptrend. Higher highs, higher lows, uptrend. Remember. Okay, Fibonacci retracement basically states that the market, when it moves from A to B, the theory is that the market will retrace. Let's say this is 0 and this is 100. The market will retrace 38% of the move. This is the 0.38 Fibonacci retracement level. 38% of the move of this move from A to B, 38% of the move from A to B, 50% of the move from A to B, 61% or 78% of the move from A to B. And this can be seen on your charting package as the 0.38, 0.50, 0.50, 0.618, and 0.786. So the Fibonacci is just giving you a guideline that the market generally, when it retraces in and around these levels. So it could, let me just free up some space here. The market could go up, come down to the 38% retracement level, and continue going up. That's a 38% retracement. Market could go up, come down to the 50%, and go back up. This is 38, 50. Market could go up, come down to the 618, then go back up again, and it could go to the 786, come down to the 786, go up, come down 786, and go up again. So that's the theory behind the Fibonacci retracement levels. Now let's take a look at how you draw the Fibonacci retracement levels on an actual chart. Okay, so we are seeing here, this is a chart of a currency pair. Now for our Fibonacci retracements, we take the move from the low in price, the swing low in price, up to the swing high in price, and we use our Fibonacci retracement tool and put over these levels. So on this chart, this is E signal. You hit Fibonacci retracement, you draw from the bottom to the top of the price move, and what you would see is the various retracement levels. These lines, this is the 38% retracement level, this is the 50% retracement level, this is 618 retracement level, and let me just move down a little bit. it's a 786 retracement level. So these are the various retracement levels. And let me redraw it so it goes to actual price. Okay, so down to the top, and we see that this market came down and settled down just above the 618 retracement level. You see the 618 retracement level here. So the market settled down just above the 618 retracement level and then continued to move up. And we can draw further retracement levels here. This is one. We go from swing low here, market retrace 50%. There's another swing low here, up to the swing high. We see that to the pip, the market went from the low here. This is the high. So we draw our tool low to high, and this market declined to the 618 retracement level, which is here, and then continued to go up. And let's just follow this market. Remove that, and let's look at this retracement. This market then went from this point here to this point here. What you can see here is we are now a series of higher highs, higher lows. So following the market action from this point here to this point here, we see Fibonacci retracement. Draw the Fibonacci retracement. You see the market came down just below the 618 retracement level and went back up. So I hope you are seeing how we draw these retracement levels. Looking at this market here, this swing low here again, the market to this swing high, the market came down to just above the 786 retracement level right here and went up, then came back down again around the 786 retracement level and continued then to go up again. And that was actually a very big rally in this currency pair. So you can see we are in a series of higher highs, higher lows. And which direction should you be trading in higher highs, higher lows? The buy side. A good strategy is to just wait for the retracement and then put in your entries. So that's how we use Fibonacci retracements to the upside. Now let me see. Let's go to the Australian dollar. On the downside, we see a huge wave down here. So this will be point A here. A, B. So we draw our Fibonacci retracement from A to B. We see that the market turned around close almost to the pip at the 50% retracement level here. This is the 50% line. Market came up to the 50% retracement and then went back down, formed a new low. So if this was A, this is B, this would be C. So this is the main pulse that we spoke about in the previous video. Main pulse, retracement, point C, another main pulse, move down, main pulse, market closed below the previous low, and this would be another retracement here. Let's take a look at this retracement here. Fibonacci retracement from point C, market retraced close to the 0.618, then it actually went up to the 0.786 as we can see here. Market went up and started to head back down, made new lows again. So relabel, Let's just leave it from the beginning. A was up here. You can't see that. Let me. Okay. So A, B, C, D, point E, F, a new low here. So this is your main pulse, retracement, main pulse, retracement, main pulse, back down. So the predominant trend here in the Australian dollar USD was down, and this went up to the 50% retracement level, and this went up to the 786. So lower highs, lower lows. I hope you can see the power of these retracement levels and the power of following the trend in the markets. And I encourage you to study this method and study the charts and study what we're saying. I watch these videos over and over. And if you want to get more advanced, as I said, you can upgrade to the Forex profit formula. Information is somewhere probably below this video, somewhere, a simple upgrade. And we go into more detail on the exact strategies, how to enter the market, what to look for when you're entering, when to exit, etc., etc. So okay, thank you very much for listening to this video. I hope you found it beneficial, and I will see you on the next video. Thank you very much for listening. This is Beyond. I hope you enjoyed it. Thanks.